we want to quickly talk about the top 10 business tax credits and deductions for agriculture, forestry, fishing, and hunting professionals. Don't you go anywhere. You're going to love today's conversation, I guarantee you. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to talk to you about the top 10 business tax credits and deductions for agriculture, forestry, fishing, and hunting professionals. So, business tax credits and deduction number 1, conservation. So if you're an active farmer, you may be able to deduct the cost of conservation practices implemented in your farm or in your business, and the IRS, not a problem. There is an IRS form, an IRS I would say program called IRC, Internal Revenue Code, Section 175, Soil and Water Conservation Deduction, that basically actually grants you tax credits and deductions for conservation expenditures in an amount up to 25% of your gross income from farming. Very important, okay? And so here are the eligible expenses. So we have soil and water conservation. Again, this deduction applies also to forestry, fishing, and hunting professionals. So we're speaking about soil and water conservation, soil or water conservation, prevention of erosion of land used in farming or similar activities, or endangered species recovery. Okay, specifically, these expenses can include the treatment or movement of earth, including leveling, conditioning, grading, terracing, contour furrowing, and the restoration of soil fertility. The construction, control, and protection of diversion channels, drainage ditches, irrigation ditches, earthen dams, and watercourses, outlets, and ponds. The eradication of brush, okay, and the planting of windbreaks. This is really important. So if you basically are interested in this conversation, please, you can ask a question down below, or we can certainly get back to you, or you can read IRS publication 225, conservation expenses. Okay, so this is really more comprehensive. And one thing you need to understand is that the IRC 175 deduction is also not available for the purchase of depreciable assets. Those that have a useful life, we're going to cover that in another category. But for this section, for conservation, I just give you the expenses that qualify for tax credits and deductions. Number 2, we have fertilizer and lime. So basically, under IRC 180, Internal Revenue Code Section 180, taxpayers who are engaged in the business of farming or similar activities, I'm talking about forestry, I'm talking about something similar, may elect to immediately expense the cost of fertilizer and lime. In other words, the benefits last substantially more than 1 year, okay? And so instead of capitalizing the expense and depreciate it over the term of its useful life. So the election is for 1 year only, but once such an election is made, so by reporting the fertilizer and lime deduction on Schedule F, line 17, you may not revoke it without the consent of the IRS. And this provision applies both to tenants and landlords if the rent is based upon production. So cash rent landlords who do not materially, in other words significantly, participate in the farming operation may not take advantage of this tax benefit. So it's also important to know that this deduction applies only to land used in farming or similar activities, which is defined as land used by the taxpayer or his or her tenant for the production of crops, fruits, or other agricultural or similar activities or similar products, or for the sustenance of livestock. So initial land preparation costs cannot be deducted. You cannot deduct that. And one thing I want to say here is that the amount of the fertilizer and lime deduction may be limited by the rule that restricts deductions for prepaid farm supplies to 50% of all other deductible farm expenses for the year. Okay, very important. Number 3, seeds and plants. So farmers may generally deduct the cost of seeds and plants used to produce a crop for sale. This deduction is taken on line 26 of Schedule F. We have actually covered Schedule F on another show, so if you are interested in that, please just search for Schedule F in our video catalog or ask a question, we'll answer you. So this rule that I'm talking about does not apply to plants with a pre-productive period of more than 2 years. In other words, for example, if we have trees and vines, okay, cost for this types of plants must be generally capitalized, not deducted as an ordinary business expense. So the one thing I want to say here is that farmers with gross income of $26 million or less are not subject to what we call the UNICAP rules under IRC 263A. This is too complicated here, so I'm not going to go into details. But again, if this rules apply to you, please ask a question below if you want more clarification, and we'll be really happy to answer you. Number 4, we have tax credits. So there is a constellation of tax credits that apply to agriculture, forestry, and associated activities. Firstly, we have the R&D tax credit. Okay, so you need to understand. So the research and development tax credit is an incentive that is available federally and in most states. Okay, so many people assume that the R&D tax credit is intended for high technology industries such as software development, semiconductor design, or pharmaceuticals. However, any taxpayer who is engaging in the development of new or improved products or processes is likely to qualify for the credit. So if you have an association with for agriculture or forestry or similar activities, you may actually qualify for this tax credit. Okay, so here are some common examples of R&D tax credits for agriculture, forestry, and similar activities. So you have development of new or improved storage techniques, development of new or improved conveyance systems, okay, development of new or improved products or processes to maximize yield, very important. So let's say you test new or improved planting or harvesting techniques, you can qualify for credits. Or testing of new or improved chemical additives or fertilizers, testing of new feeds or feeding techniques to improve livestock health or growth, testing of new soil blends including pH, mineral content, or nutrient density, testing of new techniques or products to prevent disease or pest damage. So whatever you do to actually take care of your land, take care of your livestock, you can qualify for R&D taxes. Very important. If you have development of new or improved software, this could qualify. And development of new or improved irrigation technologies could qualify. Development of new or improved techniques or equipment to minimize environmental impact, this could qualify. Okay. We also have agricultural buildings tax credits. So not the technique itself, but for the building itself. So for newly constructed or reconstructed agricultural structures, you can actually qualify for some credit at the state level and or the federal level. You also have the farmers school tax credit. Depending on your state, you can also qualify for that. So this is a credit that actually enables farmers to receive a tax credit from the state personal income tax or the corporation franchise tax to reimburse some or all of the school district property taxes paid by the farmer. So if you paid this during the year, you could qualify. So again, you want to check with your state. This is not available federally. This is only available at the state level. So you want to check with your state. Number 5, we have car and truck expenses. So this is really important. So farmers or hunting professionals or forestry professionals or professionals engaged in similar and related activities, they have cars, they have trucks, right? So as like other business owners, they have, if you find yourself in that category, you have the option to either deduct the actual cost of operating a truck or car in your business, or deduct the standard mileage rate for each mile of business use. So let's talk about the actual cost. So if you choose the actual cost method, you may deduct those expenses related to the business use of the vehicle. So this includes what? This includes gas, oil, repairs, license tax, insurance, and depreciation, subject, of course, to certain limits. And so if you choose this method, you must keep good records of your expenses because this is very important. And now, so this is for the actual cost. If you choose rather the standard mileage rate, the good thing is that the IRS every year actually set a certain number for the number of cents they are allowing per mile. This changes all the time, so it's important to check whatever standard mileage rate applies for the particular year you're filing taxes in. So taxpayers who operate 5 or more cars or light trucks at the same time are not eligible to use the standard mileage rate. Nor can the standard mileage rate be used if the owner has taken an RC Section 179 or other depreciation deduction for the vehicle. This is really, really important, and this will take a whole 2 hours or 3 hours to explain. But again, if something is unclear to you when it comes to Internal Revenue Code 179, you can ask below, and we will clarify things for you. So, when vehicles are used for both personal and business purposes, the taxpayer may take deductions only for the percentage of use attributable to the business. Very important. So this requires what? It requires detailed record keeping. So farmers, hunting professionals, forestry professionals, or other similar professionals, they have a special rule under which they can claim 75% of the use of a car or light truck as a business use without any allocation records. Okay, so this is basically a rule that came out from the Treasury Department not long ago. So the rule applies if the taxpayer used the vehicle during most of the normal business day directly in connection with the business of farming, forestry, hunting, or similar activities. Very important. Let's talk now about deduction and credits number 6, depreciation and cost recovery. So depreciation is what? So as a farmer, as a hunting professional, as a forestry professional, or any professional in a similar activity, you are allowed to depreciate assets over a period of years based upon the recovery period for each type of asset. So you have makers. We have actually covered on this. We have covered this on several shows. So when it comes to depreciation method, you have makers. That's the modified accelerated cost recovery system. So this is used to recover the basis of most business and investment property placed in service after 1986. So makers consist of the general depreciation system and what they call the ADS, the alternative depreciation system. Okay, so farming or forestry or hunting professionals, farming taxpayers, they use a GDS. That's the general depreciation system, unless they are required to use ADS. So most typically because they have opted out of the uniform capitalization rules. Okay, this is really important. And so when we talk about depreciation and cost recovery, obviously this depends on the type of equipment you have. So it's always important to enlist the help of a professional if something is unclear to you, or you can ask questions below. But when we talk about depreciation, it depends on the equipment you have, because some equipments are actually depreciated over 3, 5, 7, or 10-year periods. Okay, and some even have something called the accelerated depreciation method. So you might have like a 200% depreciation in the first year. This is called the double declining balance method. And they also, so what I'm trying to say here is that when we talk about depreciation and cost recovery, we have a constellation of rules. Okay, we have Section 179. We have additional first year depreciation, what is called the bonus depreciation. We also have a special depreciation for trees and vines. We have depreciation for vehicles. Okay, we have depreciation. There's an entire schedule that applies to the depreciation of vehicles. Okay, but the thing here is that every situation is different. So we really need to be clear about your specific situation before answering any question. All we can say here is that the rules are different. The rules are distinct based on the kind of business you have, based on the state you are filing from, based on the equipment itself, the equipment that you have. I'll be right back right after this. Don't go anywhere. Welcome back to another session of the Awesome Studio Keyword Show. We are also having a conversation about the top 10 business tax credits and deductions for agriculture, forestry, fishing, and hunting professionals. And we want to talk now about the deduction or credit number 7, right? The number 7. Yeah, we have taxes. So a farmer, a forestry, a hunting professional, or a similar professional can generally deduct the following types of taxes on line 29 of Schedule F or other schedules. So we have real estate and personal property taxes on farm or other related business assets, FICA taxes paid to match the amount withheld for employees, federal unemployment taxes on farm employees or other similar activities employees, federal use taxes paid on highway motor vehicles used for farming, forestry, hunting, or similar activities. And one thing I want to say here is that note that the state or local taxes, local sales taxes imposed on the purchase of capital assets for use in farming or similar operations must be capitalized, not deducted. Okay, so that's for taxes. Number 7, taxes. Number 8, we have office expenses. So basically, you're not spending all of your time, all of your your activities on the farm, in the forest, or hunting. You probably have an office. You probably have a place where you are conducting business, right? So we can actually deduct a lot of expenses from the operation of that office. Okay, so office expenses. So home office. So you can deduct a percentage of your home mortgage or rent as a farm expense, or as an expense, as a forestry expense, as a hunting expense, or similar activities. Now, the only condition is you have to use your home office exclusively for managing your farm, your forestry business, your hunting business, or similar activities, and you have no other location where such tasks can be completed. Very important. That's what we call the exclusivity rule. Okay, so be aware that using the home office deduction does disallow that portion of your home from being eligible for the personal residence exclusion if you were to sell your home. And you can estimate the percentage of expenses, I'm talking about rent, utilities, that should be allocated to your farm using the IRS. The IRS has a special form. They call it the IRS worksheet to figure out the deduction for business use of your home. And this is in IRS guide number 587, business use of your home. You can deduct also your cell phone. You can deduct prepaid farm supplies or prepaid forestry supplies or hunting supplies, family employee wages. Okay, you can also deduct individual retirement accounts, IRAs. Number 9, we have prepaid expenses. So basically, cash method taxpayers generally can deduct their expenses for the year in which they pay them, right? So the IRS, so IRC 461A has talked about that. There are some limits though. So there's some limits to deductions. They do occur when we talk about the prepayment of expenses. So there is something called the 50% limit. So cash basis farmers, hunters, forestry professionals, or similar professionals are generally allowed to prepay the cost of farm or similar supplies such as feed, seed, and fertilizer by purchasing them in 1 year, even though they will not use the supplies until the following year. So this allows professionals to shift deductions to an earlier tax year. So the amount of the allowable deduction for prepaid expenses is limited by RSC Internal Revenue Code, that is 464. So under this provision, the prepaid farm expenses may not exceed 50% of other deductible farm expenses, including depreciation, unless one of the following exceptions is met. So the prepaid farm supplies expense is more than 50% of the other deductible farm expenses because of a change, let's say a change in business operations caused by unusual circumstances. The total prepaid farm supplies expense for the preceding 3 tax years is less than 50% of the total other deductible farm expenses for those 3 tax years. Okay, so to qualify for an exception, the taxpayer, you must also be farm related, you must be forestry related, you must be hunting related, or you must be related to a similar activity, meaning that one of the following must apply. So the taxpayer principal residence is on a farm or similar land. The taxpayer's principal occupation is farming, hunting, forestry, or something similar, And the taxpayer is a member of the family of a taxpayer who meets one of the above requirements. Okay. Again, we're not going to go into details here, but if you have any question about the prepaid expenses related to your farming, to your forestry, to your hunting, any similar activity, please, you can drop comments below. We'll answer you. And there are other requirements that will be too much or be too long to actually get into. But one thing I want to say here is that prepaid expenses are a major deduction, tax deduction for business professionals when it comes to agriculture, forestry, hunting, and similar activities. And one thing I also want to say here is that you have to think about the timing of those expenses too. And the last deductions here, I wanna give you a constellation of deductions that will apply to your agriculture, forestry, fishing, or hunting activity. So we have Section 179 tax deductions for farm, forestry, fishing, or hunting equipment purchases. Okay, so the IRS tax code Section 179 deduction is a way to reduce the total cost of new equipment and machinery by enabling the buyer to claim full depreciation in year one. So when you hear the term Section 179, I want you to think about full depreciation in year one, because normally you depreciate assets over several years, but Section 171 has this exceptional clause that allows you to actually depreciate your asset fully in year one. So this is really good. Okay, so normally that depreciation, referred to as bonus depreciation by the IRS, will be parceled out annually over the time the purchase is financed, right? So this is something that's really good. So you can actually depreciate farm equipment, fishing equipment, forestry equipment, hunting equipment. Okay, now who and what equipment qualifies for a Section 179 deduction? It really depends. Now, according to the IRS, anyone buying, financing, or leasing new or used equipment for this tax year will qualify for a Section 179 deduction, provided the total amount is less than $3,670,000. Okay, so the deduction itself plus the price of eligible purchases. So for farmers, for hunters, for fishing professionals, for forestry professionals, that typically means equipment, machinery, tools, and software purchased between January 1st and December 1st of the last tax year. Okay, and so when we talk about Section 179, there are some considerations you need to think about. So interest paid on farm mortgages, on forestry land mortgages, on fishing land fishing related activities. This interest is deductible on line 21 of Schedule F or similar schedules, and you can deduct it as an ordinary and necessary business expense. So rent or lease payments, so cash land rent paid by a tenant, is generally deducted on line 24B of Schedule F or similar schedules in the year it is paid. What about supplies, repairs, and maintenance? So farmers, hunters, forestry professionals, and fishing professionals, they may generally deduct the cost of materials and supplies in the year in which they are purchased. Okay, and one thing I want to say here is that this will include deducting the cost of fuel, tools, and feed. Okay, and farmers, hunters, fishing professionals, forestry professionals may also generally deduct most expenses incurred for the repair and maintenance of their property. Thank you so much for your attention, folks. I really appreciate it. In today's conversation, I was having a quick overview of the top 10 business tax credits and deductions for agriculture, forestry, fishing, and hunting professionals. So number 1, we have conservation. Number 2, we have fertilizer and lime. Number 3, we have seeds and plants. Number 4, we have tax credits. Number 5, we have car and truck expenses. Number 6, we have depreciation and cost recovery. Number 7, we have taxes. Number 8, we have office expenses. Number 9, we have prepaid expenses. And number 10, we have other deductions. Thank you so much for your attention. I really appreciate it. God bless you. I'll see you next time. But until then, remember, stay marvelous.